We often hear that phrase, "the trend is your friend." What does it mean, and how can we profit from it? Welcome. Today, we will learn the following. The basic price trends, trend indicators, and practical trading tips from the concepts. The price of an asset doesn't move in a straight line, but rather moves similar to waves. There are peaks and troughs, but there is an observable direction, and we call it trend. A trend is the general direction of the price. A good way to identify a trend is through the lines traversing through the price, called as linear regression or line of best fit. A trend may exist in time frames such as years, months, days, hours, or even minutes. A primary trend may last for months or years, represented by green line. A secondary trend may last for weeks to months, shown in blue line. A short-term trend may be measured in days, shown in red line. A trend may be classified according to its direction. A sideways trend shows a price movement within a range. The price dynamics shows the support and resistance as price moves in horizontal fashion. An uptrend may be identified by the presence of higher peaks and higher troughs. As the stock moves higher, the troughs move higher too, creating a support in the trend line. The last type of trend is the downtrend, characterized by lower lows and lower highs. As the price moves lower, the peaks move lower too, creating resistance in a trend line. The three trends may exist as the price oscillates within a primary trend. The simplest way to identify a trend is by observing the chart's troughs and peaks. Peaks or highs, and troughs or lows, are commonly used among the trading language. As the price moves higher in an uptrend, peaks and troughs move higher too, as shown in the chart. In a downtrend, on the other hand, peaks and troughs move lower. By observing the highs and lows, we can plot the trend line. Trend indicators are used to identify and assess a trend, or may be used to forecast before the trend begins. We will only talk about the easiest indicators to understand, as there are countless that exist. Remember that indicators are not stand-alone and should be compounded with other technical analysis tools. Moving averages can signal trend direction by smoothing out the random fluctuations out of the trend. Common values are 20 and 50. Some may use simple moving averages or exponential, depending on the trader's preference. By theory, the price above the moving average may indicate an uptrend. This is better confirmed by the presence of crossovers, or overlapping of two moving averages, when the shorter moving average line crosses above the longer moving average. This is called a golden cross, and may signal a beginning of an uptrend. When the longer moving average crosses above the shorter moving average, this is called a death cross, and may signal a change in trend. The MACD is a versatile indicator that can be used as a buy signal, or in this case, indicate an uptrend. The histogram is the series of short lines. MACD histogram above 0 indicates an uptrend. Take a look at the chart. ADX is used to indicate the strength of the trend, but it doesn't tell the direction. The trend may be qualified as weak, strong, or very strong, depending on the value it signals. Peaks on the ADX may signal either the change in trend, or weakening of the primary trend. Weak ADX signal indicates that the price is moving in sideways. In this chart, number 1 shows the ADX signals very strong downtrend, followed by the peak in the signal. As the ADX retraces back in number 2, notice that the price changed its direction. Number 3 shows that the price then moved sideways, giving weak signal in the ADX. When the price moves up, the ADX moves significantly. Always go with the direction of the trend. Assess the trend and trade accordingly. In an uptrend, go long. In a sideways, range trade. In a downtrend, short sell. Always make sure you are riding along the trend. Look for signals of reversal and trade accordingly. This will increase your odds of successful trading. And finally, remember that trading is not perfect, so always manage the risk by carefully planning ahead the trade. Always consider the portfolio allocation size. And also plan your stop loss before the trade. Don't forget to like and subscribe. Thank you for watching.